Namaste, welcome to Arthaniti, where we discuss money and money matters to help you in your investing decisions. In today's digital economy, any company which provides essential financial infrastructure represents a compelling investment opportunity. Today, we are talking about one such company, CDSL, Central Depository Services Limited. Now, it is India's largest securities depository and holds more than 80% of all demat accounts in the country. It plays a pivotal role in the capital markets. But recent quarter results have raised some concerns. Its net profit has plunged 38% and total income 27% quarter on quarter basis. Are these temporary glitches or they represent long term challenges? That is what we will uncover in this video. We will explore CDSL's business model, financial performance, growth prospects, and valuations. So, let's begin. CDSL was established in 1999 and became the first listed depository of Asia Pacific in 2017. It functions as the central securities depository under SEBI's regulatory watch. Now, the company primarily offers electronic storage, processing, servicing of securities for Indian capital markets, eliminating the need for physical certificates. CDSL operates through a network of DPs, depository participants, which include banks and brokerage houses. Now, before transacting on the stock market became online, when people used to transact in stocks, they needed to submit a slip in the bank for transfer of shares which they sold. Often on that slip, if you remember those times, DPIDs were mentioned for the banks in which you held your demat accounts and for the brokerage houses where you needed to transfer your stocks. So, those DPs basically represent the depository participants who aid CDSL in its operations. They form a bridge between investors and the depository. They help in opening and maintaining demat accounts, ensuring efficient and secure electronic holding and trading of securities. CDSL's business model revolves around several revenue streams. To name a few, annual issuer charges, transaction based income, IPO and corporate action related services, online data services, and other value added services. As of December 2024, CDSL had registered an impressive 14.65 crore demat accounts, which represent nearly 80% of the total demat accounts held in the country. Now, this helps CDSL gain a leadership position, thereby maintaining competitive advantage in the growing securities market in the country. CDSL has built a robust ecosystem through strategic subsidiaries. Now, CDSL Ventures Limited serves as India's first and largest KYC registration agency. Centrico Insurance Repository Limited, where CDSL holds 54% stake, is registered with IRDAI, the insurance authority in the country, and holds nearly 16 lakh policies. Countrywide Commodity Repository Limited, where it holds 52% stake. It facilitates electronic ownership and transfer of commodities under the WDRA regulation. Looking at the financial performance of CDSL for quarter 3 of financial year 2025, total income stood at 278 crores, which represents a 26% upside year on year basis. Net profit stood at 130 crores, also a 21% upside year on year basis. But quarter on quarter, if we compare, it tells a different story. Standalone net profit declined 38% quarter on quarter basis, and total income dropped by 27% quarter on quarter basis. Some of the reasons that can be attributed to this sharp fall: firstly, sharp slowdown in transaction volumes thanks to market volatility, correct? Then IPO market slowdown, again a result of market volatility. Quarter 3 normally sees fewer corporate actions as compared to quarter 2. CDSL is migrating to cloud infrastructure, which resulted in technology cost surge. SEBI mandated contributions to Investor Protection Fund increased 73% quarter on quarter basis. The growth in demat account slowed to 30 lakhs per month in quarter 3 as compared to 40 lakhs per month in quarter 2. Now, these are some of the reasons which can be attributed to this sharp fall in net profits. The breakdown of the income composition for quarter 3 suggests that nearly 81 crores was earned through annual issuer income. Transaction charges, 59 crores worth of income was earned through this route. IPO and corporate action income stood at 58 crores and other income at 37 crores. Now, meanwhile, expenses were distributed as employee cost 27 crores, IT cost 22 crores, SEBI and IPF contributions 15 crores, other administrative expenses 36 crores, and tax of 30 crores. CDSL maintains an impressive profitability matrix. Net profit margin stands at 50.8% for the trailing 12 months. Operating profit margin at a whooping 85.67% for the same period. And EBITDA margin stands at nearly 70.93 again for the trailing 12 months period. The company has achieved excellent net margins consistently over the past 3 years, with a strong return on equity at 38.52%, return on assets at 29.9% on a trailing 12 months period basis. The balance sheet of the company is also strong. Current assets stand at 10.4 billion rupees, cash and short term investments at 8.7 billion rupees, and it has a near zero debt to equity ratio. CDSL continues to enhance its digital capabilities by initiatives like My Easy mobile application, which allows investors to view holdings and transact as well. eKYC, eDIS, eAGM services modernize market access and infrastructure. These digital initiatives were recognized when CDSL won the Market Infrastructure of the Year award at the 7th Regulation Asia Award for Excellence in 2024. Checking the valuations of the company, the PE ratio stands at 43.1 compared to the industry median of 46.34. PB ratio stands at 15.6. Now, these elevated multiples reflect the market's expectations of continued growth and CDSL's dominant market position. According to Alpha Spreads analysis, CDSL's intrinsic value is estimated at 620.89 rupees per share, suggesting that at current valuations of around 1140 levels, the stock appears to be overvalued by about 40%. Wall Street analysts target have given an average target of 1410 rupees per share, with a lower forecast of 1111 and a higher forecast of 1722. Now, this suggests mixed sentiments among professional analysts. Checking the stock performance now, year to date, the stock has declined nearly 35%. It is currently trading around 1140 levels, which is 40% below its 52-week high and nearly 41% above its 52-week low. Let us check some of the risk and challenges for this stock. Well, slowing growth, the pace of new demat account openings has shown sign of degrowth. In February 2025, only 22.6 lakh new accounts were added across both depositories, representing a 20% drop from January and a 48% decline from February of last year. Market volatility has also added to the concerns. The transaction based revenue is influenced by market activity. Management noted that transaction making ability in a bull market is far higher as compared to a bear market, highlighting vulnerability to market cycles. Correct. Regulatory changes. have also affected the performance. CDSL's operations and revenue models are subjected to regulatory watch. So, changes in SEBI regulations impact its profitability like it did in the previous quarter. CDSL technology cost has risen significantly, up 85% over the past 9 months, following a 65% increase in financial year 2024. While necessary for long term competitiveness, these investments put pressure to near term margins. In recent investor communication, CDSL's management emphasized several key factors. Its CEO Nehal Vora urged investors to view CDSL as an infrastructure company for long term sustainability rather than focusing on quarter to quarter results. Management aims to expand retail investor participation from 7% to 15 to 20% of India's population. Continued investment in technological infrastructure despite near term cost pressures, viewing this as an essential long term competitiveness. Acknowledgement that sluggish sentiments contributed by geopolitical issues, overall slowdown in the world, certain regulatory changes have affected market participation. So, to analyze CDSL in a snapshot, the bullish factors include its dominant market position, strong financial matrix, robust balance sheet, and structural growth story. Whereas on the bearish side, the bearish considerations are premium valuations, slowing growth, especially in new demat account onboarding, rising cost, and market dependency can be seen as bearish factors. CDSL represents a high quality business with dominant market position and an excellent financial matrix, but its current valuation appears to price in significant future growth prospects. The current 35% correction in 2025 has improved the risk reward profile. The CEO Nehal Vora emphasized that CDSL is best viewed through a long term lens as an infrastructure play on India's growing capital markets rather than as a quarter on quarter story. What is your take on this stock? Have you invested in this stock, and at what levels? Do you see this stock as a future investment opportunity? Let me know in the comment section. Before we go, this video was for educational purposes and not a stock recommendation. Please approach a financial advisor for your investment decisions. If you have liked this video, please like, share, and subscribe for more such informative content in the field of financial literacy. Until next time, stay safe and goodbye.